Remember, allocations have started increasing towards China, but with the kind of unrest that we've started to see, is that under threat? And will India's outperformance therefore continue? Ashwini Agarwal, your thoughts?
I think a couple of things on the outperformance aspect. Over the last 3 months, in my opinion, what we saw was a little bit of catch up of the foreign selling that had happened for the previous 12 months, and therefore we saw very large inflows, especially in light of the fact that most world markets, especially emerging markets in North Asia, were under pressure. Sort of a capitulation trade, in my view. And as North Asia starts to look a little bit better, of course, today is not the right day, but if you look at the trend over the last week or so, if North Asia starts to pick up again, you might see a little bit of a pause in inflows as far as foreign investors are concerned coming to India. This is a very, very short-term phenomenon. Medium term, if you look at 1 or 2 years, I think the macroeconomic opportunity in India is very, very compelling, and that keeps me very excited about the prospect of India outperforming other opportunities elsewhere in the world. Though, of course, one has to contend with the fact that a lot of stocks and sectors are quite expensive. So we'll have to see how that plays out. But medium term positive, short term probably not as much so is what I would say.
Sectors that you're looking at, you've already caveated by saying, some of the sectors are expensive. We recently hosted Atul Suri here in our studio, who said India is like an FMCG stock. It's expensive, but you're going to make money. So tell us which sectors you're looking at.
So for the moment, banks continue to look very good. I think the credit cycle is positive. I think the credit cost cycle has bottomed out. And for the next year or two, you might actually see credit costs being significantly below long-term average, and earnings could continue to surprise on the upside, especially for the PSU pack is what I would say. If you look at the commentary coming out of the entire banking system, it's very, very consistent. There is no dearth in terms of demand for credit. Deposits availability is starting to tighten a little bit, but nobody's talking about pressure on NIMs just yet. And credit costs are well under control. So I think from a large sector perspective, I know the sector's done really well here today. I still think there's a lot more legs to this sector. The other is less obvious as a sector call, but I would say that pharmaceuticals, especially some select mid caps and small caps, are very, very attractively valued. And I think it's a tail wagging the dog there, in the sense that many people are continuing to worry about the outlook for the United States and actions by US FDA, whereas the domestic branded generics business is getting ignored. And that's a very valuable business, a very profitable business. And I think as crude prices and material prices and solvent prices correct, you might see an improvement in profit margins for the pharmaceutical companies, and valuations are quite attractive. So, those are the kind of two areas I would point to where I see a lot of value emerging.
Ashwini, I take your point on that banks are going to do well. They already are. But would you then move away from the leaders, considering PSBs is what you talked about, move out from SBI and look at more of the bottom-up smaller names, perhaps?
Well, in any sector re-rating process, and, we saw that in the IT sector, for example, over 2020 and 2021, the leaders do well in the initial part of the cycle, and after that, the smaller and the mid caps take over and they do spectacularly well. You've seen some of that already in the price over the last 2 or 3 months, where some of the smaller banking names, especially in the PSU space, have done spectacularly well. So I think that might continue, because the earnings growth is still underappreciated in my view. The institutional investor continues to be reasonably skeptic about the PSU space. So I think there is more more room for upside here. But obviously, given the kind of rally that we've seen over the last 3 months or so, if the global markets sell off or if foreign inflows cool off a little bit, could we see a small correction? That's entirely possible. But medium term, I would say the next 1 year or so, I still think, yes, there is room for smaller PSUs to do quite well.
The other space, Ashwini, that you talked about was pharmaceuticals. I'm intrigued to know why pharma, what's working for them?
It's like an FMCG business in the Indian context. If you look at branded generics and if you look at a whole bunch of companies that have a leadership positions in certain segments or certain brands, these are businesses that make a gross margin of between 70 and 80% and an EBITDA margin of close to about 30-32%. And what's getting hidden is the fact that you've had a very high base over the last couple of quarters on account of sales during COVID, where both the retail and the wholesale chains stocked up and probably customers stocked up as well. So the first couple of quarters of this year have been somewhat muted. On top of that, what you've had is a very, very erratic raw material packaging cost environment, which is slowly stabilizing. So what I'm really saying is that you've got a couple of bad quarters behind us. The domestic business is really attractive with the cost base now stabilizing, valuations being attractive. That's the place I would look for value. Also, I think in many businesses where US is, let's say, 15-20% of revenues or 25% of revenues, and that contribution is slowly declining, I think to focus on US FDA regulatory related issues or to focus on the pricing pressure on the US might be missing the woods for the trees, because earnings growth in aggregate will still come through on the back of stabilizing cost inputs and the domestic market and other emerging markets for that matter.
Hi, morning. It's very polarized views when it comes to the entire new age tech space, but would you stick your neck out and say that with efforts being made on the path to profitability, there are select opportunities within this space?
So obviously, when stocks are down 70, 80% or 60% from peaks a year ago, it does make sense to look at individual ideas and to figure out, where the correction is already adequate. And you're right that most companies are now talking about a path to profitability, and this is what the street wants to hear. But I personally have looked at a couple of these businesses, and I still haven't had the conviction to put money to work. I still think that there might be some more wait before the bottom is formed, but I could be wrong. Some of these businesses are starting to look very, very attractive. Maybe I'm being too greedy, but I will stick to my traditional value focus areas in banks and pharma, that, as I mentioned, and in a whole bunch of other mid and small cap stories where I think the value is quite compelling. So I am looking at it. It's interesting, but I still have to put money to work here.
Still don't have the conviction to put money to work when it comes to new age tech. Maybe when you do, we'll touch base with you again. But Ashwini, apart from some of the traditional sectors that you spoke of, like pharma and defense, there's a lot of opportunity in the likes of these Capex themes like defense stocks, railway stocks, and they have been proving to investors that they can create wealth. Would you be interested here?
So okay, I am interested here with the caveat that historically I have been very suspicious of businesses which has government as a very large customer, because if you look at history, government has a very poor track record of paying on time, or in many instances, the orders get delayed, or they don't come through, and a lot of promises come to naught. And that's what's been holding me back. But at the same time, I am cognizant that the government of late has displayed amazing policy consistency and focus on reviving the industry. So this time around, it could really be different. This is a very, very dangerous statement to make, as many people have said in the past, that past behavior is often a predictor of the future. But the government has been very consistent that it wants to revive the economy. It's been very consistent that a lot of the defense production should happen in India and should ideally move to the private sector. So yes, there might be opportunities here, and many of the companies are very competent to deliver what the government is asking for. And yes, it is a very interesting space, with the risk that governments can always change and government views can always change.
Always the risk, isn't it? Ashwini Agarwal, great to have you on the show. Thank you so much for taking the time out.
Thank you for having me.